Welcome back. This is India Market Open. We're taking stock of the futures and options space. It's turned out to be second consecutive day of trade where the Nifty has in fact had a close which has been flat. Now, and along with that, we haven't actually seen too much traction when it comes to the future space. So it does seem like consolidation is at the moment in the going. Now, when we consider the futures, of course, there was very little change in open interest for the Bank Nifty, which also came off by around 0.5%. That is also where we did see a little bit of traction coming in. But, you know, all the activity is not as much as in futures as much as it's in options. So let's pull the options market up specifically with respect to the Nifty and your overall open interest distribution picture. As we move into expiry this week, what we're seeing is a further strengthening of the 24,000 mark, and I say that because we started seeing a lot more writing around 24,100 and 24,200 puts, while we continue to see the strengthening and increase in open interest as far as the 24,000 put is concerned as well, which serves as a near-term support. And on the higher end, we haven't seen as much open interest distribution at the 24,500 mark. In fact, do remember that we're starting to see a little bit of unwinding coming through on a relative basis, not as high in open interest as compared to what we've seen in terms of puts. That also means that at the moment, the bias is slightly towards the positive, even though we are seeing consolidation as far as the Nifty is concerned in the near term, and a lot more traction now shifting to the 24,800 call. So that's the 800 point range we are working with as far as the Nifty is concerned. Today is the Fin Nifty expiry. We're keeping an eye on 23,600. That's where we were already seeing a lot of calls and puts being written. Just please be aware of the kind of option premiums, specifically when it comes to sellers, because the risk-reward ratio isn't always favorable when it comes to Fin Nifty, especially on expiry day. But that said, let's take a look at your stocks which are in focus. We've seen a little bit of a recovery in fertilizer stocks. Chambal Fertilizer, of course, one of them, which are looking at longs along with ONGC, and shorts in Balkrishna Industries and Titan. Among other stocks which are on our radar, we have Ipca Laboratories, Tata Tech, as well as Hindustan Copper. All of them are looking at about a short covering. But the question really is, what do you do with these markets? Let's get in an expert opinion. Well, we have Amit Goel of Amit Ventures joining us on the show. Morning, Amit. Thanks so much for joining in. How are you looking at markets at this point in time, and what are you doing with options here?
Hi, good morning, Agam, and good morning to all your viewers. Thank you for having me again. Market have been, the secular uptrend remains intact. We have been, in a consolidation phase. Market is trying to take a breather in the absence of any major triggers or cues, which might be the budget, which is around the corner. So I don't see any major movement in the market till we have some cues. Either there could be some cues from the global markets or from the budget. Till such time, I see market being fairly in a range-bound trade with an upward bias on Nifty at least. 24,000 happens to be the recent low, and the OI data also suggests that there is a lot of support at 24,000. And till we cross the 24,400 and punch a new high, the market is likely to be range bound. So an options trader could look at setting up any non-directional trades in the indices to take benefit of the theta decay or the premium decay. But caution is warranted here, since we are closing in on the budget area time frame. There could be an uptick in the volatility because the current volatility is fairly low at about 10-12% in the major index, which is Nifty. So any uptick in the indices and a sharp movement in the underlying price action could hurt these sellers. So a little bit of caution is warranted, but it's essentially a non-directional market for the time being.
Sure, Amit, but looking ahead, you have a view on the Bank Nifty, and you're in fact also placing an option structure here. Can you take us through that?
Yes, structurally speaking, while Nifty is fairly strong, Bank Nifty has corrected in the last 3-4 sessions, mainly on account of the major downtick in HDFC Bank. Now, having said that, I'm a little bearish as compared on Bank Nifty as compared to Nifty, simply because of the the underlying bearishness in HDFC Bank primarily. Because of that, I'm looking to set up a non-directional. See, the overall view remains non-directional sideways, but Bank Nifty, on account of the overhang of HDFC Bank's, short-term bearishness, I'm suggesting that we set up a bearish to sideways short triangle in which we sell the 16th July expiry strikes. We sell the 51,000 put and the 53,500 put. So this is a fairly, bearish short triangle with a sideways view. Here we are looking to collect a maximum profit of 3,200, which if you look at the overall trend for the last few months, this is a very small premium to collect on account of depression in vols. So a buyer beware, or rather a seller beware here. We will also keep a rupee stop loss of 3,000 rupees, and this entails a margin of 1 lakh. Now, the way I would like to play this is slightly for advanced traders. This is how I would suggest them to play. Is while we have a range bound move, any sharp movement in Bank Nifty to the tune of about, say, 500 points from the starting point, we will look to roll this triangle in the direction of the flow of the market. What I mean here is, if, say, for example, the market corrects by 500 points, fairly on a closing basis level, we will close the existing legs and then move the entire triangle by 500 points on both the sides. As in our current example, we have the 51,000 put and the 53,500. Suppose the market falls by 500 points in Bank Nifty, we will close these legs, whether in profit or in loss, and shift the entire triangle to 50,500 and 53,000, which will be the new triangle. So what we are trying to essentially do is follow the market's flow while remaining non-directional, which is essentially the view, sideways to bearish.
All right. Well, Amit, fair enough. So what Amit is actually proposing to do is not necessarily, add wings at the moment, but manage perhaps this triangle by actually, liquidating the initial triangle and making a new one at a new level, provided you have that change of 500 points coming through. But that said, Amit, we're looking at a lot of strength in names like ONGC. I believe you have a view there as well.
Yes, I do. ONGC, I think, is the flavor of the day. With Neeraj also, speaking extensively about it. Obviously, ONGC, as we all know, any chartist would know that it has broken out of a 10-year-long range. Even if I look at the recent year-to-date movement, it has been in a consolidation range since the beginning of this year and has given a comprehensive and a clear breakout of this range. Now, so obviously the call here would be to go long in ONGC, wherein on account of elevated premiums or on account of elevated IV levels, we will opt for doing a credit strategy in which we will sell a 290 put, one lot of July expiry, and we will buy a hedge of 285 put. The max profit here is going to be about 2,500 rupees. And the margin, if we consider the margin around 25,000 rupees, gives us a good ROI of about 10% yield. Now, we will also keep a technical stop in this trade if our sold unit becomes at the money, in the sense, if the stock breaches 290 levels on closing basis on the downside, we will consider this to be a technical stop and get out of the trade. I estimate a loss of about 1,500 rupees if this technical stop is breached anytime during the next few days. The condition here that I have, what I noticed on the option chain in ONGC is there has been some amount of additional writing in calls, which is surprising, on the 300 strike. So what we would want to do is, right now there are about 1 crore shares written at the 300 strike. What I would want to do is probably wait for a few minutes, wait for substantial reduction in this open interest of 300. And if, let's say, there are around 20-25 lakh shares unwinding, that would give me a little more confidence that, yes, there is momentum remaining in this stock. Right. So that's going to be the trigger for me to initiate this long trade.
All right, well, fair enough. So watch out for unwinding as far as the 300 call is concerned. That's where you have substantial writing coming through. But on that note, Amit, taking a moment to thank you for joining us and taking us through your views on the markets, and also, of course, helping us with a handful of option structures that we can work around with. With that, it's back to you all.